What's bugging the bond market? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of the Crypto is Macro Now newsletter, which you can find on Substack. Hi, Noelle. It's wonderful to see you.
Maggie, so good to be with you. How are you doing?
I'm doing great. And thanks to everybody who's joining us live on YouTube and on Substack. Welcome. So happy you could be with us. If you would take a moment and hit that subscribe button on whatever platform you are listening from, it would really help us out. And we will include a link in both the description and the chat. For Noelle's Substack, if you are not reading this every day, you should be, especially right now, because gosh, there is a lot going on, Noelle. So let's dive right in. If we look at the market action today, since we just closed the U.S. session, a bit of a muted day for U.S. stock markets, even though we did see the NASDAQ manage to grind higher. Treasuries also didn't move that much, but that may not be a good thing. That yield on the 10-year is sitting right around that 4.5%. Why are we seeing this upward pressure on yields, Noelle? What's happening with Treasuries?
There are many things going on, and the message is indeed very loud and is coming from many different corners. One of all the reports that we're hearing about the soft CPI print, the softening, wasn't really a softening. I mean, a lot of that was due to rounding. There was actually maybe 2 or 3 basis points, both in the headline and in the core month-on-month increase difference. So it wasn't really a softening. And it's fair to assume that a lot of the price increases from tariffs are not really in the system just yet. Retailers and distributors are working through inventories. They're going to do what they can to delay this, etc. So this was sort of a warm-up. We cannot assume that inflation is done and that the tariffs aren't going to have any impact. I think that's part of it. I also think part of it is the return of the risk premium. I mean, we can't really assume that went away, but it seemed to be somewhat lower than previously. The return of the risk premium is back, not just because of the uncertainty, the colossal uncertainty that we still have around the direction of U.S. tariffs and its impact on the economy and on consumption and at a global level. It's more the risk premium is there. But I think more important, Maggie, the bigger message that we're seeing with climbing yields and a falling dollar is an exit from the United States, from U.S. assets, from foreign holders, from foreign investors. And they actually were a very significant part of the market. I'm not just talking about the equity investors from, for instance, from European pension funds. I'm not just talking about those that hold U.S. bonds as part of their reserves. We also have a lot of leverage in the market, as we saw with Taiwan, as we've seen with various Japan scares. So I think a lot of this is just an exit from the U.S. bond market generally, whatever the outlook for the economy may be.
Yeah, that's, I feel like there's some doubt around that, Noelle, which is interesting and I think risky, because once the tariffs, there was the pause on the tariffs, you have the sense that investors are like, okay, that's done. Even though they know that there's a pause, like, listen, they're going to work it out. They don't want to have to endure the pain. They're going to kind of get down to the negotiating, and this is what they do. And, this idea that people are running out of U.S. assets. We've seen Mag 7 sort of rally all the way back from where they were, and the Treasury auctions are going well. So is this real? What makes you think that this is a larger trend that's continuing?
The dollar has had ups and downs, but it has been trending down. I think that is the key. What's more, it is a key part of the strategy. It is a key leg of the strategy that lower bond yields and a lower dollar haven't got the lower bond yields, are getting the lower dollar, and that should be setting off alarms. The lower dollar is going to, obviously change the economic outlook, not just the United States, but also its trading partners. But I think that is the key metric to watch. And if indeed you were seeing foreigners pile back into U.S. markets now that the tariff scare is over, which we know it's not, but even if that were the thesis, the dollar wouldn't be falling like it is.
That's really, really important distinction. I'm so glad you made it. Tommy Thornton's in the chat. Hey, Tommy. He said the bond market is the adult in the room demanding fiscal discipline.
Yes, that's another feature. We don't, and part of the risk premium, there doesn't look like there is going to be much of a reduction to the federal deficit this year. And if anything, it could even increase, especially if the administration does get its tax cuts through, which means there's more issuance coming at a time when there are fewer buyers in the market. Now, this, of course, can be smoothed, shall we say? That's probably the polite way of putting it. We know that lower bond yields are a key part of the administration's strategy. And so we know that they're going to get them down somehow. And as soon as Besant can stop negotiating with key trading partners and pivot his focus to bringing the bond yields down, I think we're going to see some action there. What would that even look like? We're going to see buyers step in. There's probably going to be a change to the capital rules for banks, encouraging them to buy more treasuries. Maybe there'll be some yield curve control with either the Fed or related institutions stepping in and buying, especially at the long end. We don't really know what that's going to look like. We do know it is going to increase liquidity in the market. And of course, that is going to be good for risk assets. Is that what is driving stocks now? I don't think so. Is that what is driving crypto now? It's probably something to do with that, yes.
Well, okay, we're going to get back to that because I think that's really important. So a bunch of questions coming in. And I think this is, Doug, the $1 million question, $1 trillion question. At what point will the 10-year begin to kill the stock rally? What's the pain point? This is important for two reasons. So we've had a couple of guests. For those of you who've been listening, the fiscal is going to be so important, and it's not getting a huge amount of attention right now. I think partly because it's a long process, right? And politicians talk a lot of nonsense. So we've got to all bear through the sort of politicking and jawboning and negotiations. So that may be why it's not headline news right now, but it should be, because I think it is, as we've been hearing over the course of the week, a lot of investors, smart investors, are getting really concerned about what happens to the bond market if they sniff out that they're going to continue to spend and blow out the deficit. But Noelle, if you think the government's going to step in somehow, maybe the question is, at what point does it not just kill stocks, but at what point does the administration become concerned about the level? What's the pain point that will force action from them?
If I had to hazard a guess, I'd say roundabout here, because it was at these levels of the 10-year that Trump did the last big tariff pause. I don't know if you remember back then when we were going to have a relationship, but then yields went shooting up and somebody talked sense into him and he decided to delay the implementation of the extra additional above the 10% baseline tariff. So again, they moved last time we were at these levels for the 10-year. And again, they're busy at the moment. They got a lot of other things going on. So I think when Besant does get some more progress under his belt, he will turn his attention to that. What will the 10-year be by then? I don't know. But roundabout between these levels and 5%, it's danger territory.
Yeah. The Fed, where does this leave the Fed? And, are they going to be part of the plan and getting interest rates down? Right now, we know there's some tension. The market's pricing out Fed rate cuts, if I'm not mistaken, at least for the moment.
Yes, it is. And largely that's, in part, the issuance, in part that's to do with the inflation, acceptance that inflation is not necessarily going to be coming down as much as many people think. And the urging, many, the president and many investors are indeed urging the Fed to cut now because inflation is down. They forget that it's a backward-looking figure and it's the forward projections that matter. The Fed's not going to want to make the same mistake again, but there's a very big but there. Obviously, one of the unspoken mandates of the Federal Reserve is to maintain market stability. And the Treasury market is not, it's, the most liquid, safe haven asset, they tell us, but it's actually not that liquid. And when you do have an exodus of a key part of holders of treasuries, and especially the overhang that we still have to come onto the market, then it's not necessarily that liquid. I do think we would see the Fed step in were the liquidity in the Treasury market to dry up. We've seen this before. This does not mean we're going back to easing. It does not mean the Federal Reserve would necessarily lower rates should that happen. They have many other tools in the box, but the bottom line is they put liquidity in the market one way or another. And that's this Federal Reserve. Again, Maggie, we can't really forget that the chairmanship changes in about a year now, just over a year. And you mentioned earlier that all of this can take time to work through. It is part of the strategy is to get a cooperative Federal Reserve to help keep the dollar down and keep yields down. They obviously do not see Jerome Powell as that cooperative Fed chair. They're probably going to wait for the next one to come in.
Yeah, well, the markets let them, though. We can talk about all of this, but as sort of Tommy indicated, the markets may have their own idea about what they want them to do, and start to sort of make that voice heard. And we know what happens that can be, we haven't been there in a while, but that can be very disruptive. Reef Insights is talking about the Fed doesn't seem interested in engaging in QE. Well, one thing we know, Reef, is that they're not going to call it QE. They'll call it something else. We're going to hear a lot of creative acronyms if they do decide to step in and intervene. Talk to me a little bit about crypto sniffing this out. So I should say Bitcoin. I'm going to really try not to use that word because I know with the deep work Noelle does, and we just had a conversation with Jeff Dorman, who reminded us it's a wrapper, right? There's no such thing. So we're going to try to be smarter, especially with you, Noelle. So let's talk about Bitcoin.
Jeff is totally right. Jeff is totally right. Bitcoin is not necessarily crypto, but then again, when Bitcoin goes up, the market does tend to follow, not necessarily the same pace, but it's. I mean, there are performance differentials, as Jeff points out.
Yeah. So what kind of, first of all, what kind of environment what does well in this environment? Is this a backdrop where Bitcoin will perform well and is an alternative, or and is it that decoupling that we have been waiting for, or is it still trading like a risk asset, and will it be hurt by market turmoil or volatility?
In my opinion, it will always be seen as a risk asset. That doesn't mean it isn't also a safe haven asset, but risk asset timeframes are generally short term. In the short term, we know Bitcoin is volatile. In the medium to long term, we know it isn't so volatile. So it all comes down to timeframe. Short term, Bitcoin will always act like a risk asset. Why? Because there are many macro investors in the world that treat it like a risk asset. It is volatile. It doesn't have cash flows. It is sensitive to liquidity. So it will always have that characteristic. And if they treat it like a risk asset, it will behave like a risk asset. But any safe haven asset is a medium to longer term proposition. So we also have the investors coming into the market that see it as a hedge against currency dilution and general craziness out there. So it's got both narratives going on, it makes it unique. I mean, you can't say the same for gold. You certainly can't say the same for equities. And this is one of the things that is one of the many tailwinds accumulating behind Bitcoin at the moment. Today, is it acting like a risk asset or a safe haven? To be honest, it depends on the hour, it depends on the movement. If you step back and look at the performance, you'll see that there is safe haven activity going on, but the ups and downs in the short term are going to move along with sentiment.
Yeah, and it's something you have to be aware of. When we were talking before coming on, you mentioned that ETH has been outperforming. And people are probably curious about why that is as we sort of look at the broader ecosystem. What's going on there?
Yeah, it is absolutely extraordinary, actually. After everyone writing ETH off, it's a dead network, we're done, and it had been painfully underperforming for the past year relative to Bitcoin, especially. To suddenly see it shoot up, I mean, since year to date, it's up. Think of the past week, it's up like something 40%. Year to date, it's up almost 70%, whereas Bitcoin's only up around 20%. It's astonishing, the performance of ETH. And why did it happen? Well, there was a very big software upgrade, a very big protocol upgrade. The ETH community are very good at doing this, changing the engine of the airplane while it's flying. It was successfully pulled off. I won't go into all the different features because I don't think that they're that relevant. What it did was remind people that this is a new technology. It is evolving, and it will fix the problems that the community identifies. And it had been very oversold. There were a lot of short positions that are being closed, and that brings the momentum players back in. I don't know where ETH goes from here, to be honest, but it is good to see it finally do some catching up.
Yeah. I've been thinking about this as we've had all of this news, right? We're talking about the fiscal really going to come into focus as the budget makes its torturous way through Congress. We have President Trump over in the Middle East doing deals. We have controversy about planes. We have a lot of diplomatic breakthroughs. We have the pause on the tariffs. I mean, it's, the headlines are extraordinary. What's happening for digital assets and crypto in Washington? There was so much enthusiasm. We saw so much market activity. I think indicated, by the way, we have Coinbase just was put into the S&P 500. So it feels like we sort of turned this corner, but now there's so much going on. Is there still all that momentum that people felt like there was going to be? And are things fast tracked, or is it sort of slowing down in the, the bog that is DC?
That is such a good question. I love the way, the bog is definitely the right word. There is momentum. I mean, Coinbase making the S&P 500 is pretty epic. That does mean that anyone that
Yeah.
holds the index in any way, shape, or form, any type of vehicle, be it 3D, even in the 401ks, they have exposure to the crypto market now. I think that is absolutely astonishing. So that was big. But one thing we're not paying enough attention to, in my opinion, first of all, take a step back, and we have a lot of macro tailwinds for crypto, Bitcoin, I'll be more specific there, with the liquidity that we were just talking about that is inevitably going to be coming in, not only in the US, but pretty much everywhere, as everyone's going to be stepping in to support businesses that are struggling to cope with the tariffs. And that means currency dilution relative to hard assets, et cetera, et cetera. I mean, we've talked about that story before. And there's also the regulatory narrative. That has been a very strong tailwind ever since President Trump won the election. We knew that there was going to be a new sheriff in town, and this was going to open the door for the long-awaited crypto regulation. But we also saw last week that this is actually very fragile. There is a Republican majority in both the House and the Senate, but it's not much of a majority. And getting any kind of agreement in this fairly polarized atmosphere is going to be hard. We saw the genius stablecoin bill, which was the low-hanging fruit, which should have been the easy thing to get passed, and which originally had bipartisan support, fail the cloture vote. In other words, it failed to go to a vote on the Senate floor. Why? Because the Democrats in unison didn't vote to push it through, and even some senators from the Republican Party voted against it. And there are various concerns, many of them actually quite legitimate, to be honest. But this derailing of the momentum could end up being serious if they don't get it back, and they have something like a week left to do so. If the stablecoin bill isn't passed, we're probably not going to see the market infrastructure bill, and we're probably not going to see anything then after that either. Because again, this was the easy one. If they can't get this one done, they're not going to get the complicated ones done. Now, with this is not priced in my opinion, to the markets just yet. And it would be a bigger blow to ETH, for instance, and some of the DeFi tokens and some of the smaller altcoins than it would to Bitcoin, because we're counting on there being some sort of framework around Web3 applications around that would benefit the various layer ones. However, this doesn't mean that it's over for crypto. Obviously, the mood is different. The SEC held a fascinating roundtable just the other day about tokenization. There's going to continue to be progress, but rather than a Congress-backed bill, which would enshrine definitions and protect crypto against whatever happens in 2028, it's probably going to be more through the regulators, the financial regulators.
So I would encourage everyone to, you did a great write-up, sort of bullet points on some of the sort of headlines and the meat of the discussion, I think, that happened at that SEC roundtable. I encourage everyone to go and read it, because not only will it bring you up to date, even if you think you are not investing or interested in investing in that world. One of the things I am always floored at is how much TradFi and big financial names are in this space, and they are in it, and they are laying plans, and these products are going to be coming at all of us. We will all be asked to make a decision about an investment decision about this stuff in the near future. It feels that way. And so I think it behooves all of us to really understand what's going on. And that was a fantastic write-up. And it seemed to me, Noelle, that a lot of the discussions were not as sort of drama and surface and, crypto bad, crypto, it seemed like they were very smart questions. And some of the reservations that were being brought up seemed like people actually knew what they were talking about, or actually starting to understand the space and ask smart questions. Is that right? Did I read that right? Or?
You hit the nail on the head there, Maggie. What people haven't realized is that the big names, the very big names, I mean, throw out any big financial institution you want, and we can show you that they have been actually looking at the impact of blockchain technology on financial markets for some time now, since before the Biden administration even. I personally, would talk to them about their efforts in tokenization and their interest in bringing crypto services to their markets. But obviously with the official chill in the last administration, all of that was put under wraps. It was reawakened middle of last year. It was accelerated when it looked like Trump was going to win. And obviously now they're hitting full velocity. And it's big. I mean, we're talking Bank of America hinting that they want to issue a stable coin. It's JP Morgan tokenizing. It's BlackRock insisting that everything will end up on the blockchain. Now, I've for years now been pushing back on the hype behind tokenization. Of course, not everything is going onto the blockchain, nor would we want it to, but the potential is significant to rethink how markets work. And while you may wonder, why would we want to redo equity markets? They work just fine, thank you. When you start to realize that what we're actually talking about is putting all assets, any type of asset, and cash on the same rail, on the same ledger. And these are programmable assets as well that can unlock new functionalities. When you start to understand that the sophisticated markets that we enjoy today that spread the opportunity and distribute savings, the sophisticated markets, well, they're not sophisticated compared to what they can be were the underlying technology to have a total overhaul. There are efficiencies that, efficiencies to be explored, functionalities to be explored, and the bottom line, an opening up of access to a broader range of people. Markets should be a tool for opportunity. I get excited about this because it is a fundamental rethink of not just what markets should be, but also what money should be. And that was the big opportunity that blockchain technology gave us. It gave us a new tool to ask different questions.
Yeah, it's coming. It's coming. I mean, the amount of work that's being done. And again, like, encourage everyone to go read that to at least keep your sort of, your education and your vocabulary up to where it needs to be, because the regulators start to put guardrails on. This thing's coming at us like a tsunami. Okay, amazing philosophical and investment conversation happening in the chat, which I really appreciate. Jared asking, do you think we will see a gold-based currency on blockchain or some version of digital gold?
There already is many gold-backed tokens. Pax Gold is one of the ones that I keep an eye on because it's a good way to plot the correlations between crypto assets and crypto gold, as it were. Will it be in demand? I mean, probably, because crypto native people might want some exposure to gold as well as Bitcoin, and having a crypto-based gold is simply easier to put in your wallet-based portfolio. Will mainstream want crypto-backed or a blockchain, gold on the blockchain? Sorry. Again, probably not, because they don't really need to, especially when you do have your mainstream investors probably getting exposure to crypto through the ETFs or any of the other equity-linked vehicles. In other words, not much of an innovation there. Where the innovation gets interesting is, can you use the gold token for collateral in a DeFi application or something like that?
Yeah, that's another space that's getting really interesting, given all of the conversation around gold. I'm going to give you folks a programming note. It's a couple weeks, but Rick Roll's coming back on. He's looking into this, which is so interesting because everyone thinks of him as like a super traditional gold bug kind of guy. But he's really forward thinking about the space he knows well. And so he's looking at that. We can ask him a lot about that. And we have a lot of conversation happening about bonds, which I think is right. Following the MOVE index, tracking that as a good indication of what's happening with bonds. Ched, that's a great point to bring up. Nancy Davis is going to be on with me on Friday. If that's not a name that's familiar to you, she has the iVol ETF. Is all about bond volatility, but she also ran Goldman's prop desk and commodity desk for a long time. This is the person to talk to about bonds and all things bonds and volatility. We're going to all have to like strap on our our thinking caps to follow her. But I'm really looking forward to that conversation because treasuries are leading right now. So be sure to roll up with any of your questions about that stuff because it's a really great opportunity to ask somebody who is like really, really deep in the weeds of bonds and derivatives, importantly. And they're really important when you're talking about bonds and what's happening too. So roll up for that. So Noelle, Europe, this is the conversation that a lot of people are having, and we're going to circle back to the macro part. If there is this shift out of the US, does it feel like Europe's the destination because it's just more familiar and safe? Do we have to think about valuations, or are there hurdles that you see there in terms of it being that simple?
Nothing's ever that simple in markets. We wish, right? Europe has been one of the big beneficiaries of the exodus from the US markets, the deflation of the US exceptionalism narrative. It has been one of the big beneficiaries because there were a lot of European funds that were invested in the US and they're coming home because they do see greater opportunities here, especially given the need to spend more, not just on defense, but I live in Spain. We had a nationwide blackout a couple of weeks ago. They're now realizing they need to spend trillions on redoing the grid as well, so no one else has to go through that again. Now, the problem with Europe, though, is that it is Europe. The European Union has some good ideas every now and then, and they know how to talk the talk, but they don't actually know how to walk the walk and actually getting any changes in the onerous regulation that is one of the biggest dampeners of innovation on this
Mm.
continent is that's a reach. That's a tall reach, especially when there are so many vested interests. And again, none of this is really going to start taking off until we have something that even looks a little bit like capital markets union and the way to pool the funds here. So Europe has potential. It has done well, though. That could mean that there could be a pivot to another region now. What would that be? I'm hearing a lot of people looking at China, risky for sure. India, risky for sure, especially with the conflict with Pakistan on simmer. Now, it's pretty scary, actually, if you have to be a macro investor. Where do
Mm.
you go? For now, Europe seems to be the safest option, but safe is not really that. Safety is not that easy to find these days.
Yeah, absolutely. I mean, that's that capital market, that further integration and union, it's a really big piece of the puzzle that's easy to forget about. But it's really crucial, and that's gonna be super interesting. I just want to read something Christopher said because I think this is a great point he made. And he said, "In time, the market will teach you about its cycles. Then your misplaced certainty will be nowhere to be found." This was a sort of in the chat, but for anybody who's super certain about what's going on, that's a tricky place to be right now, Noelle,
Yes.
isn't it? I mean, there just seems to be so much uncertainty, which would um, need a sort of higher level of caution than usual. I mean, you've watched markets for a long time, and you sit at the intersection of both of these things. How are you thinking about the sort of level of uncertainty that's out there?
It reminds me of one of my favorite sayings from, I think it was André Gide, is, seek out those that search for the truth, run from those that think they found it. Because
Mhm.
again, there is no universal truth when it comes to market, and what we think are certainties, as we found, are definitely not. Uncertainty is something that we simply have to learn how to navigate, and we've done it before. I'm going to throw out another saying that I love very much, which is they can pull the rug out from underneath your feet, but you can also learn to dance on a moving carpet. It's
Mm.
easier said than done for sure, which is why I repeat that if you have the luxury of focusing on the medium term, then that is how you position and that is how you sleep well at night. And medium term, we know there's liquidity coming into the market. Medium term, we know that there's a geopolitical reset underway. Areas that might benefit from that are, again, probably Europe and Canada to some extent, perhaps Mexico. But again, play the geopolitical game. It is something I pay a lot of attention to because,
Mm.
one, it's relevant, two, it's absolutely fascinating. But again, recommendations, got to do the homework and got to think medium term. The uncertainty is not going away anytime soon. And while there is arguably a bit less uncertainty now than the beginning of April 3rd, for instance, there's still a lot more. Even when it comes to China, I think it was just this morning I heard, I was reading something, a Trump statement saying, no, it was Besant who was saying that the current situation with China, that's the floor. In other words, it's probably going to go up from here, especially since 90 days isn't that much time.
Yeah. Yeah, and I think I mean, we haven't talked about T-shirts and wire, folks, but I think that ought to go on one because I think that is just a wonderful quote that you said, about, seeking, answers and running from those who think they know the truth. Because it does seem like we're in this period right now where people really have to challenge themselves to keep leaning in and digging deeper. The market swings quickly, right? Like we saw that with the tariffs and it was, whoa, we're 20% off the lows. But that seems to be, I don't know, that seems a little worrying. Like we should be asking a lot of questions. about all the unknowns we don't know. And
Exactly.
yeah.
And that is, if I can jump in, that's something that I've been thinking quite a lot about. It is exhausting me, Maggie. You are in the fire hose of all of these narratives and these shifts and everything, and the people that you speak to all have fascinating and well-informed views, but juggling everything and trying to get a landscape, a mosaic, or put the puzzles together in the jigsaw it's a struggle. But there's a big but here. We're talking about big things. We're not necessarily talking about charts, or we're not talking about small earnings per share variations. We're talking about big things. And going back to what you were saying before about questioning what we think we know, and I'll tie this into what I was mentioning earlier about rethinking what even money should be.
Mhm.
In times of great change, it is when we can ask the bigger questions. You never really know how something works until it breaks. And we're sort of about to witness how the global economy works, because it isn't working the way it used to. It's unusual that it is being intentionally broken. We've seen it break before unintentionally. This is actually intentional. But fine, we're here to learn. We're here to rethink what it could look like. And we're here to understand that when the old definitions no longer hold, new definitions can move in. When old economic theories no longer hold, new economic theories can hold in. And this is, to go back to what we opened with, this is yet another of the tailwinds behind the crypto market.
Fascinating stuff. Oh, we are in the presence of some serious knowledge today. This is amazing. I like the way you said that, Noelle, because it sort of challenges us to lean into the change, which can be scary, and keep an open mind about possible innovations. And I think that's a great way to look at it. And there's going to be disruption in that. But can we find a way through? And who are the people who are thinking about this on that really deep level, and not just sort of, gambling, which there's a lot of that too.
Yes,
Which is
and that's
fine.
fine.
Just as
That's
long as we
fine.
know that's what you're
Yeah.
doing. Right.
Exactly.
Exactly.
Gambling has its place, but what we're looking at is a once in a generation opportunity to really rethink how things work. And in part, it's because things are being broken intentionally, but also because there is a new tool in the box. There's actually several new tools in the box. I mean, I'll say the blockchain technology and crypto assets are one of them. The impact of artificial intelligence is another. And we're not even thinking about all of the investment that's going into the connectivity required for commercializing space. And so again, we can go on and on about the different tools in the box now, but they do give us an opportunity to think about new types of questions and new types of solutions.
Yeah. But only those who are educated will have a seat at the table. If you don't know what anyone's talking about, you won't be able to sort of weigh in on the changes, which is what I am really focused on and worry about. It's incumbent on us all to just try to make sure that we are understanding the changes that are happening. Noelle, it's always so fun to catch up with you, but this was just extraordinary. By the way, I should mention, I'm talking to Juliette de Klerk as part of the SIC conference. That's happening right now. I don't know if you have not signed up, do so. We have a link that we will put. It is an affiliate link, so we'll get a commission from it, but check the chat, check the description. Some of these conversations are happening there, and I think they're really important. And Juliette, I'm really interested in catching up with. She was talking about the changes happening in this really huge disruptive way, but warned that we might have to go through the dark night of the soul before we got to unlocking some of the promises. I don't know how she feels about that right now, but I'm really looking forward to hearing what she says. So I hope you'll all join us for that on May 19th. Noelle, fantastic stuff. You are always doing this hard work in your Substack, which I just so appreciate and we can all benefit from. So thank you for taking the time today.
No, thank you so much, Maggie. Thank you for everything you do and helping us get smarter every single day.
We're going to make that t-shirt, people. That is happening. Everybody, Noelle has a holiday tomorrow. Enjoy your holiday and the rest of your week. Everybody, we will be back, as I said, with Nancy Davis. Get your thinking caps on about bonds and bring some good questions so we can take advantage of having her. And in the meantime, take care and good luck out there. We'll see you soon. Thanks.
Bye, everyone.